Hey, what's going on, guys? Welcome back to Q and Learning, and this is a stock analysis on Activision Blizzard. And today we're going over the reason why they have been underperforming for the past year, and why I believe that even though Activision, with really good fundamentals, may still continue to underperform for the next few years. So, to begin with, Activision Blizzard Incorporation, currently valued at $62.38, trading on the New York Stock Exchange. And right now, they've been under a lot of controversy with their management, and overall have had a lot of uproar between their work, and a lot of analysts have been downgrading them as well. That being said, I do want to go over their fundamentals to just check to really see what Activision should be worth. So the first thing is just going over their market cap. So the market cap in over the past year has actually gone down significantly, around 12 billion, from 62.56 billion to roughly 50 billion. And that has a lot to do, with the actual stock price. But they have been bringing down, their actual fundamentals as well, which has been really good. So, their trailing and forward P/E currently is both under 20, which is something we really like to see. Although it's not something that we can really compare, or we should be comparing just on itself. Just having P/E in, times of high trading and high volume is really important. And going along with that, again, really good number here with the PEG ratio from at 1.15. PEG ratio being under 2 is really solid. Anywhere between 1 and 2 basically just shows the overall company is really healthy. And their price to sales, it has gone down since the past year, but 5.56, they are trading on really high, price to sales. Again, price to sales being high, this kind of just means that investors are essentially willing to pay more for this company based on future projections. And so 5.56, while it is high and it's higher out of the range of, that 2 to 3 that we are typically looking at, it's not something that we can totally discount. And with a price to book of 2.95, again, almost like a full point and a half from, last year, 2.95 is, it is within the range of 1 to 3, definitely on the higher side for sure. But fundamentally, Activision is not looking that bad. Especially with their enterprise value to revenue being under 10. Well, their EV/TV beta, it is over 10, which again, that kind of just means from certain valuations, they can be overvalued based on their enterprise. And then the last ratio I really want to cover is, their debt to equity. And again, in the past few years, Activision has done really well with their debt to equity. Just about 4 or 5 years ago, they had DDE of 0.5, which again isn't that bad. But the lower you can get that for a company that's dealing with a lot of money and a lot of free cash flow, this is really important that they did bring the debt down. And as of right now, in times of uncertainty, I really like companies that have low debt to equity. And so currently being at 0.21, they're fundamentally, in my opinion, pretty good. I wouldn't give them a 10 out of 10, but Activision would probably be up there at a 6 or 7 in terms of fundamentals. Just getting into some revenue stuff, as you guys can see, I'm just using Yahoo Finance. Activision has been doing not that well, at least in my opinion. It seems that the growth is actually slowing down, even with COVID. They did another 1.5 million in sales, from 2019 to 2020. But you have to also look at where Activision was before, right? In 2017, they were putting up almost 7 million in sales. And for it to be 4 years later and them to putting up roughly 9 million, again, while that's a 20% increase or so, their growth should really not be slowing down this much for a company. While it has been out for a long time, you would think that company that's been putting out these fast-paced games, trying to create the newer and better content, the revenue would still be going up, with companies like Logitech and Corsair, and just over COVID, a lot of people just getting back into gaming, and people who never gamed before getting into it. I don't like that the revenue is slowing down, and on top of that, their actual cost of revenue is staying about the same. It's not really going down, and it's still roughly 2.5 million. But their gross profit has gone up a decent bit since 2017, from 4.5 to 6.5 million. So in terms of those accounts, I think Activision, again, with revenue and the gross profits and, their past earnings, they have done relatively well compared to estimates. But, I'll just be careful because, I think Activision could truly come down to their lowest of assumptions, intrinsic value, close to roughly 40, 45. But I think a lot of investors right now, taking account, the revenue and potential growth, even at 10, 11% with their EPS that they're putting up per year, I would say Activision should be valued roughly between 75 and 80, just based off their intrinsic value. But even though it does show that they're a little bit undervalued, I do think Activision's management as of right now, and just having all the news about them, is not really a good sign. And especially even with their last earnings, right? they did not do that bad in their last earnings. They beat EPS, they did relatively okay on their revenue, and they just absolutely came down, right? You're talking from nearly $76 a share, roughly where that intrinsic value should be, to like where the stochastic ends here at roughly $68 a share. And it's starting to go lower and lower, currently trading at like 62. And as I just want to let you guys know from like a teaching standpoint, when gaps do like open up like this, like a huge gap like on earnings, on certain days when news comes out, 9 out of 10 times this gap right here, it fills. And so Activision, as you can see, kind of did try to pull up here, but it came right back down. So I do think if you guys can get in on Activision on like a really low value here, and what I mean by low value is when you look at like historically where like they've had some resistance. It seems like they've had some resistance close to 61. So if you're trying to trade like Activision at like 61, if you want to wait a little bit long to like the 55 level, I think Activision trading there would not be bad at all for the long term at least. As you can see here, Activision, huge drop, right? 62 to roughly, let's see, 55. It did take a very long time, and they dropped all the way to 42, right? But they were able to fully recover it eventually. And so I think the same thing will happen here. Wherever goes down has to come up, and wherever goes up has to come down. I think that saying has a lot to do with both. But yeah, the last thing I really want to just go over, other than the trading stuff, is that they have been downgraded, as saying from the beginning, from JP Morgan. Now they're currently, I believe, overweight was the rating, and it's no longer neutral. As you can see here, reluctant to downgrade, underperforming. But just basically, this article is saying that management is not doing really well right now, and I kind of believe the same thing. But that being said, I do think Activision, from a fundamental standpoint, can be a buy. I just think from a technical standpoint, it may take some time to buy Activision. But yeah, that's basically all I have for you today, guys. If you guys got any questions, leave them down below. Make sure to like and subscribe. Hope you guys have a great rest of your day. Peace.